A winner has been declared in the private equity bidding war for Australia's second largest hospital operator, Healthscope. US-based groups TPG and Carlyle have trumped their rivals with an offer that values Healthscope at $2.7 billion. It's likely to be a sign of things to come, with foreign private equity firms taking a growing interest in Australia's lucrative private health sector. Francis Bell reports.
After a 2-month takeover battle, US private equity firms TPG Capital and the Carlyle Group have emerged as the winners of the Healthscope prize.
It would appear that they've put forward a price that will knock the other guy out of the water, and it appears to be the case. So I think they clearly wanted the business, and this was their way of making sure they got it.
The cash offer of $6.26 a share is believed to have narrowly edged out a bid from rival private equity firm Kohlberg Kravis Roberts. It represents a 40% premium to Healthscope's share price of $4.50 at the start of the bidding war in May. The announcement of the takeover, with unanimous support from the Healthscope board, pushed the stock up another 10% by the close. Healthcare analyst Stuart Roberts says the deal, struck at a time of market volatility, confirms the view that Healthscope has been undervalued for some time.
This stock was valued considerably less than TPG and Carlyle's bid only a couple of months ago. As a result of some historical issues that Healthscope had faced, whereas private equity coming in has seen that there's a very strong demand for healthcare services, and in particular for private hospital services. And that means that they're willing to pay up a lot more than the market was formerly willing to pay.
Healthscope operates 44 private hospitals across Australia, as well as GP clinics and a pathology business. It says the TPG Carlyle consortium will keep the company's existing management and stick with its business plans and growth strategies. That means there's no immediate plan to sell off the pathology business, which is battling for market share behind bigger players, Sonic and Primary Healthcare.
In the pathology space, there'll be a need to get big or get out, and perhaps they'll pursue growth in that area, Francis, to ensure they can maintain their market share and position. However, if it is spun off, remember, it's only about 20% of its earnings, so the vast majority of this company is dependent upon the outlook for hospitals.
Stuart Roberts says he wouldn't be surprised if Australia's private healthcare sector continues to attract interest from overseas private equity firms.
Well, the population's ageing. The median age of Australia is now about 37. It was 32 in the early 1990s. In addition to which, we're going through a population boom. So there are just more people generally. And about 44% of them have private health insurance. So they're willing to use it.
With a rival bidder unlikely to emerge, Stuart Roberts says the only potential hurdle for the deal is attracting Foreign Investment Review Board approval. If all goes to plan, shareholders are expected to vote on the proposal by October.